Have you ever invested in Raiz? Or perhaps you've considered it. If so, you've probably heard the news: Raiz is shutting its doors. But why? What's the story behind this major financial platform's demise? Before we dive into the specifics, let's quickly recap what Raiz is. It's an investment platform designed to make investing simple and accessible. It uses a strategy called dollar-cost averaging, where you invest small amounts regularly. This strategy can smooth out market volatility and potentially lead to better long-term returns. The decline of Raiz. So, why is such a popular platform closing down? It's a complex issue with multiple factors at play. Increased competition. The financial technology industry has exploded in recent years. Numerous other platforms, offering similar or even superior services, have emerged. This intense competition has made it harder for Raiz to maintain its market share and profitability. Regulatory challenges. Financial regulations are constantly evolving, especially in the fintech space. Complying with these regulations can be costly and time-consuming. Raiz may have faced significant regulatory hurdles that impacted its operations. Economic headwinds. The global economic climate has been volatile in recent years, with factors like inflation and interest rate hikes affecting investor sentiment. These economic headwinds may have reduced investor appetite for platforms like Raiz. Changing investor preferences. Investors are becoming more sophisticated and demanding. They're seeking more personalized investment advice and a wider range of investment options. Raiz's relatively simple, one-size-fits-all approach may have fallen short of these evolving expectations. The future of microinvesting. While Raiz's closure is undoubtedly disappointing, it doesn't signal the end of microinvesting. Many other platforms are still thriving and offering innovative solutions. As an investor, it's essential to stay informed and adapt to the changing landscape. Key takeaways. The financial technology industry is highly competitive. Regulatory challenges can significantly impact fintech companies. Economic conditions can influence investor behavior. Investor preferences are constantly evolving. With that said, thanks for watching, and until next time.